Jess asks, if you're back paid for 7 years of incorrect pay, do you need to amend the last 7 years of tax returns?
No, you don't. So income is derived when it's actually paid. So just because it relates to a different year, when you're actually receiving the money, that's when it's taken to be derived. So you don't need to amend 7 years. You just include it in the current year. It shows as a lump sum e-payment on your payment summary, and you can get a tax offset as well, which will help because you've got some other income that is now added to your other taxable income.
So are we saying that that tax offset will not penalise somebody because they've received this lump sum? They may go into another tax bracket, but if they had been drip fed that money each year, they may have paid less tax. So that's why there's a tax offset?
Yes, exactly. So the intention with the offset is to smooth out that tax so you're not penalised for receiving it all in one lump sum. So there are a few conditions though. The payment needs to be more than $1,200 and you need to have received it, which relates to the last at least 2 years prior, and you need to be a resident at the time of receiving it. So there are a couple of conditions, but the intention is that it reduces your overall tax implication because you're getting it all now rather than the previous couple of years when you should have received it.
Yeah, 100%. Nicole, what happens if someone didn't lodge a tax return last year? Can you lodge two at the same time, or do you just put both of them into the one? How does that work?
No, so you definitely need to lodge a tax return for each year, and there are due dates for lodgement. If you haven't lodged your return by the due date, or for some reason, whatever, you are lodging two at once, you do definitely need to lodge two separate returns. You just need to be mindful that you could get interest and penalties charged, and particularly if you have a tax liability, there may be the penalties. So usually they will just charge some interest, may not charge a penalty, but that's all up to the tax office
Some discretion.
Yeah, whether they do it or not. But definitely don't put it all in one return. It needs to be in each individual return.
Yeah. And I guess with the way technology is now and the digital payments to the ATO from your employer's bookkeeping software and whatnot, it would be very it would be hard to put it all in the one return anyway.
Well, particularly with the income, that income is
it's financial year, right?
Yeah, and it's financial year, and you would be surprised at the amount of information the tax office actually get. So they know the interest you've received, the dividends, the payment summary income. They also know if you're a contractor. The people that you are contracting to, they lodge a taxable payments report that tells the tax office how much you've actually received. So the tax office know lots.
It's so weird,
and you
isn't
really
it?
It's really tricky to put that additional income all in the 1 year. You could put expenses all in the 1 year because the tax office don't know that, but that's not right. You need to allocate those expenses against the income that it's earned.
The wild thing is, if someone did do a tax return late, so what you're saying is potentially they could penalise you for that, but if you did owe money for that financial year, they might back pay or back charge interest. Now, the wild thing is I would hypothesise that if you did a tax return late and they owed you money, they wouldn't pay any interest on top of that money.
Oh, no, not usually,
Yeah.
but, the tax office is a funny beast sometimes. Sometimes you do, sometimes you see that sort of thing coming through.
So there is a discretionary play sometimes.
Sometimes it is. It's a bit hard because sometimes we see that happening and then other times you don't. So I would say try and get your return done by the due date. That saves all the issues. I know life happens at times and it is a bit tricky, but the idea is that you get it lodged by the due date.
So the end of the financial year, obviously, well, for some it might not be obvious, 30th of June, the new financial year starts on the 1st of July. If you don't have an accountant, what's the due lodgement date?
31st of October.
Right, so you don't have long.
No, not really. And it's important to make sure that you wait for the information to come through. Make sure you have everything available. And I also would not lodge your return straight off the bat, straight after 1st of July.
Yeah.
Give it a couple of weeks because of all this information the tax office have, you need to make sure that it all comes through properly. Unless you have very specific records and you know that that's right 100%, then that's a different story. But yeah.
Yeah, and we might swing back around and touch on that. Shirley, do you have to lodge a tax return if you're 15 and below the tax-free threshold? So Shirley's either 15 and listening, what up, Shirl, or a child in her life.
Yeah, so if you haven't had any tax withheld and your income is under that tax-free threshold, which is $18,200, then no, you don't need to. There are different rules though if you're under 18 and you've got unearned income. So that's like interest or dividends or trust distributions. You can only receive $416 of that income. So there will be tax payable if you have that type of income and it's more than the 416. So if it's just normal wages and salary, you know, the kids are working at Macca's or whatever they're doing and they're under that 18 and they're under that threshold, then no, they don't need to.
Cool. James asked, if your side hustle has made a loss, can you deduct your expenses against your regular income, or do these losses get carried forward until, I guess, the side hustle makes money?
So there's a few rules that you need to be aware of. These are called the non-commercial loss rules, and there are 4 tests that you need to look at. You don't need to meet all 4, you just need to meet one. So one of those is that there is more than $20,000 in sales for the side hustle. That's excluding GST. The second test is you've made a profit 3 out of the last 5 years. There is real property involved in the business or the side hustle, which is that it's more than $500,000. So that's like if there's land or buildings, other assets that are used in the business. And then the last test is...
Nice side hustle if there's a 500K block of dirt or property.
I know. Let me just go. The last test is that there are assets in the business worth more than $100,000. And so when you say side hustle, this also incorporates other businesses that are making a loss. So this is in your individual name, and it includes the side hustle. So when you're looking at, can I claim these losses, you need to meet one of those tests. And so they're the 4 tests, and they apply to like a real business that's not just a side hustle. So it's important to make sure you're aware of all of those things.
Yeah, and I mean, if you are side hustling away and the money is starting to come in and you do have the curliest of little questions here, it might be worth paying an accountant a few $100s. You can claim that fee in the next financial year, or if they charge you before for the following year or whatever, it's deductible.
Absolutely.
But what I kind of try and tell people is with the side hustle, it basically just all sits on your TFN.
Yeah, exactly.
And even if you're a sole trader, it's all on that tax return, right?
Yes, and that's why it's important to look a bit broader as to, well, what are the rules? Because it incorporates more than just the side hustle. So if you do have a loss and you meet one of those tests, then that loss is applied to your other income. So if you have wages or dividends, interest, anything like that, the loss is applied. But if you don't meet one of these tests in a side hustle or a business, then you can't claim it. It just gets carried forward until the next year, and then you have to apply these tests again.
Hey, it's Glenn here. Thank you so much for watching today's video. You made it to the end. Can I ask a favor? Can you hit that like button and maybe hit subscribe if you want to get notified when we release further videos just like this one, whether you watch the Money, Money, Money podcast or Retire Right. And remember, if you want to learn more about investing, I've got an investing book, The Quick Start Guide to Investing, and there's a link in the description to get your hands on a copy. Thank you so much. Bye.